Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week's screen deals with Dividend Attraction. Ooh, does that sound interesting? And alluring. Kevin Matras, head of our Research Wizard division, here to explain it all to us. Right. Dividend Attraction, unlike Fatal Attraction. Why are you paying attention to dividends lately?
You know, first off, in this week's roundtable, just yesterday, we were talking about the prospect of slower growth here in the United States. I think the projection is for 2% annual growth rates as opposed to the more historical 3% growth rates. And I think we also talked about slower growth really across the globe, you know, emerging markets and this kind of thing.
Right.
And I think one of the reasons for this, you know, projected slower growth is the deleveraging that we are seeing across the board, from businesses to consumers. You've got businesses who are going to find it harder to acquire credit and financing to expand their business, and you're also going to find it more difficult for consumers to be able to afford everything they want. So how does that tie into stocks? I think that while smaller cap companies that are, you know, innovative, always creating new products and solutions and this kind of thing, I think that those companies are always going to have a degree of favor. People are always going to be interested in those companies, but in this slower growth environment, because again, slow growth does affect earnings.
Right.
In this slower growth environment, I think the larger, more stable companies that can produce solid growth, solid earnings in a more sustainable manner, I think these are the kinds of companies that are going to grab people's attention, and I think these are going to be sought-after holdings.
Usually it's the larger corporations, the larger companies that pay dividends, right?
That is right. You know, a lot of the larger companies are large because they have built a very, you know, established and loyal customer base. You know, their products are used in a very widespread manner. And in turn, I think this is what helps them really create sustainable growth rates. Financing is also an unlikely issue for these kinds of companies for their operations. And they're usually generating a great deal of cash. And a lot of these big name companies, though, to attract investors' cash, they will pay their shareholders a dividend to be able to get them to invest in these companies. I think that as these different investment vehicles, you're talking about stocks, you're talking about bonds, you're talking about other kinds of financial instruments, as these different investment vehicles try to attract investors' cash in this slower growth environment, I really do believe that the companies offering a little extra, like dividends, are going to be the ones that will have an edge. What's interesting, though, let me just say, over the last year, we have seen, we've read about, we've heard about companies that have actually cut their dividends and have even stopped paying dividends altogether. So in that sense, it is kind of more difficult to find companies that are paying good dividends. But those companies indeed are out there if you know where to look, and that's what we're talking about today.
And you don't see many small cap companies paying dividends, right?
Yeah, you really don't, and that's because a lot of these smaller cap companies, they are really focused on growing their business, so all of the earnings that they produce usually are poured right back into their company to be able to finance their expansion and this kind of thing. But when you're looking at the larger companies, you know, these kinds of companies don't have the kinds of aggressive growth rates that the smaller company would have, or at least they don't have the opportunities for the aggressive growth rates that the smaller company has. But that doesn't mean that they're not profitable. They're generating tremendous amounts of cash. They're usually producing solid earnings. But since they don't have those growth opportunities, what are you going to do with that money? You're going to pay your shareholders a dividend, you know, for them taking a chance on the company. So that's why you see the larger companies producing dividends, and that's why you typically will not see a small cap company produce a dividend for their shareholders.
All right, give us the screen parameters for Dividend Attraction.
The screen starts off with a tried and true parameter. We're looking at companies with a good Zacks rank, and we are saying companies that have a Zacks rank of less than or equals to 3. So we're looking at strong buys, and holds. What's interesting, though, is that, and people should understand that it's harder for a large cap company to break into that Zacks rank of a 1 or a 2 spot. So that is one of the reasons why we're including the 3s. But we are drawing the line at 4s and 5s, no sells or strong sells. We're also making sure that the company has a 5-year historical growth rate of something special. And here we're saying greater than or equals to 10%. 10% is a fantastic growth rate. So we want to see a solid history of good growth. Then we also want to make sure that there is a good projected growth rate as well. In addition to a track record of solid earnings, it is important to make sure the company has projections of growing in the future. If the company is not going to be growing, that in fact is going to affect their earnings, and that in fact could put their dividend in jeopardy. So it's very, very important to make sure that the company does have solid growth prospects in the future. And again, 10% is pretty good. We're talking about, potential 2% on an annual basis, and, slower growth rates around the world. So a 10% growth rate, I think, no matter how you slice it, is still pretty impressive. Mm-hmm. As for the dividend portion of this screen, here they are. We're looking at companies with a 5-year average dividend yield to be greater than the average dividend yield for the S&P. So again, we want to see above market yields, stocks that are producing, returns greater than the average for the marketplace, right? And we also want to make sure that the stock's current dividend yield is greater than their 5-year average dividend yield as well. So again, we're insisting that their current yield be greater than their average dividend, and again, that gives people the comfortability of knowing that, hey, these guys are moving in the right direction. I see that their payout ratios are getting better, and it's something that's going to make people more attracted to those companies.
All right. How many stocks came through this week?
I think there was maybe about 40 or 45 stocks.
Really?
So surprisingly, there is a lot of companies that are hitting these good growth rates that are paying a decent dividend. So it's very interesting to see. But again, once you run the screen and you see the stocks that are coming through, then you want to go in there and do some additional analysis to figure out which ones are the right ones for you. And I would suggest trying to focus in on the companies that are in the best industries based on the top Zacks ranked picks, or the top Zacks ranked industry picks.
Give us a few names.
Yeah, there's 5 that I highlighted today. So you've got ITC Holdings, McDonald's, everybody knows that, PepsiCo, Republic Services, and Meridian Bioscience. What's interesting is that you will find a lot of companies that are familiar to you because they're large and their products are widespread. Right. But you're also going to find some names here that you may never have heard about. But all of these companies have very good growth rates. They're paying a nice dividend. And I think these companies are attractive not only for potential price appreciation, but also for that extra dividend that you get.
All right. Do you own any?
None of those.
All right. And if you want to check out the remainder of those 40 that Kevin talked about, get over to Zacks.com's homepage and click on the headline under the Screen of the Week banner and right next to Kevin's picture, and then it'll be contained in that text piece. Kevin also uses the Research Wizard stock screening and backtesting tool. It's a very powerful program to achieve all of the screens that he talks about here on Screen of the Week. And if you want to find out more about that, you know where to go. We say it every week. Zacks.com/Research Wizard. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.